Hello traders, hope you're doing well. Now traders, have you come across a situation where you enter a trade and as soon as you enter, just within some time, the market reverses without any reason and hits your stop loss? Yes, you're not the only one facing this issue. This is how a lot of retail traders are losing their money in the stock market. Now the main reason for this is we are not marking important levels on a chart before the market opens. Okay? In today's video, you will learn how to mark important levels on a chart so that you do not fall into the trap placed by these big players. If you mark all these important levels which I am showing you today in your next trading session before the market opens, then there is a very high chance of your trade turning profitable. Now without any further delay, let us look into what are these important levels which I am talking about. Now traders, this is exactly what I do at least 30 minutes before the market opens. Doing this has helped me so much. It has helped me to avoid false breakout and lot of losing trades. I'm very sure this will help you too. Basically, I do analysis on charts on multiple time frame and mark important key levels which can act as strong support and resistance level. I suggest you to watch this video with complete attention because this is very important. I understand the length of this video is more than 20 minutes, okay, but it's very crucial for me to cover all the necessary points so that you understand what levels can act as support and resistance level while trading. Okay, so let us start. The first thing what I do is I mark previous day high and previous day low on the chart. Now let's see how it is done. Now traders, this is a Bank Nifty chart 5 minutes time frame. Okay, imagine that the data what you're seeing here, this is the previous day data. Okay, now today's market is yet to open. Alright, so we need to mark previous day high and previous day low in this chart because it can act as strong support and resistance level. Now how to mark previous day high, previous day low, I'll show it to you now. Now if you look at this chart, the market opened here, right? And then it went up. From this level, the market went down. Throughout the day, it was in downtrend. Since this candle was the highest point of the day, we will mark that level. We will draw a line here. So this becomes our previous day high. Alright. Now after this level, the market went down. Right. So from this level, the market went up. We can clearly see the lowest price of Bank Nifty for the day was here. So we will mark this level. Now what you see here are two lines. Right, this is the previous day high and this is the previous day low. Okay, now this previous day high and previous day low can act as strong support and resistance level for the next day. Now if I put CPR, I can clearly see the market took support at CPR and then it went up. So previous day CPR is also acting as strong support level. Now these are the important level which you have to mark before the market open. Alright, now the market opened. Okay, the first candle was a red candle. It was unable to breach the previous day high level. Okay, and today's CPR is here. Now let's see how the market moves. Traders, here also we can see the market respected the CPR level and it went up to previous day high. Now previous day high is acting as resistance level. It's coming to test the previous day high again. Now this candle also failed to breach the previous day high. And finally the market closed here. Now traders, if we had not marked previous day high before the market opens, we wouldn't know that this was acting as a strong resistance level. Can you see? The market came down, took support at CPR, it went up, it was unable to breach previous day high, it came down, again it tested, it came down, again it tested. So yesterday's previous day high was acting as a strong resistance level. The market was unable to breach this. Now if I put pivot points here, okay, we can see that from CPR level the market went up, right? As soon as the stock broke resistance 1, the people will think the next target is resistance 2, which is here. Right now, if I had not marked this level, I would have entered the trade and then the market would have gone down, hit my stop loss. But since I marked previous day high, I know this can act as a resistance, so this helped me avoid to take a trade. So it's very important that we mark previous day high and low as it acts as strong support and resistance. It does not mean every day it will act as support and resistance, but it is important that we mark this level so that when the stock come to this level, we'll be more cautious when we're taking a trade. Alright, so that's the important of previous day high and low. Now let's check out other important levels. The next important level which we mark on a chart is virgin CPR. Okay, now you can see here this is a chart of Nifty 5 minutes time frame. Okay, now the first important level what I told you we need to mark is previous day high and low. So if you look at this chart, this level is previous day low, right? Now this level is the highest point of the day. This is previous day low and previous day high. So what we can notice here is the entire day the stock movement was here, which is above the CPR level. This was yesterday's CPR level, but no candle touched the CPR level, right? No candle broke the CPR level. So when no candles touch the CPR level for the entire day, we call this virgin CPR. Okay, this is the CPR, but no candle touched. So this becomes virgin CPR for the next day. So what we need to do, we need to mark this level. Okay, so this entire range I will mark. Okay, so this level can act as strong support or resistance level. Alright, now let's see how the market moves. The market opened here, it broke virgin CPR level, right? Now it's taking support at virgin CPR and it's trying to go up. Now traders, can you see the market rejected this level and went down? What level is this? This is previous day low. So the market is rejecting previous day low level. Alright, so it's acting as resistance. Now again we can see this virgin CPR level is acting as support. Here the market opened below virgin CPR level. It went up. It was rejected at previous day low. From there it came down. Now again it's taking support at virgin CPR level. So if we had not marked this virgin CPR level, how would we know that the market will reverse from here? Just because we marked, we know why the market is reversing. Okay, so the end of the day the market closed here. Okay, traders, here only you can clearly see how the market respects virgin CPR level, previous day high and low, right? So that's the importance of marking this. Now those traders who do not mark this level, they will not know why the market rejected this level, but we will not fall for this trap because we have marked the important level. Okay, now this virgin CPR which I have drawn here, the market broke this virgin CPR level, right? Here you can see it broke this level. So this virgin CPR is no more a valid virgin CPR. Okay, but if you see for today, this was the CPR level and no stock breached the CPR level. So this becomes virgin CPR for the next day. Now the virgin CPR will be powerful for up to 5 days. So I will mark this level. Alright. Now one more important point. This is no more a virgin CPR. This is our latest virgin CPR. Okay. So if I scroll down, now if you see here, no stock breached the CPR level. So this becomes virgin CPR. But the next day, the stock did not come to this level. The next day also it did not come. But however, we need to mark this virgin CPR level for next 5 days because the power of virgin CPR is valid for 5 days. Okay. So what will I do? I will mark this also as important level. So what do we see here? This virgin CPR level we have marked. So this virgin CPR is no more required because the market broke this level, right? So we will remove this and today's CPR became virgin CPR for the next day, right? So we have two virgin CPR. Now next day, let's see where the market opens. The next day the market opened here. It went down. Now traders, this was the market movement for the next day. So what can we see here? The next day the market rejected from this level. What level is this? This was our virgin CPR which we had marked. So this level was the virgin CPR level which was formed 3 days ago, right? The market did not come to this level the next day. The next day also it did not come. Still we mark this level because virgin CPR is valid for 5 days. Power will be there for 5 days. Since the market opened here, right? The market did not come to this level at all, but it respected the previous virgin CPR level. So exactly this level it rejected, again it came back, it's acting as support. Now that is the importance of virgin CPR. Okay, now if you check here, this was previous day low and this was previous day high, right? The market did not respect previous day low, but it respected virgin CPR. So from this only we need to understand, every day it's not necessary for the market to respect previous day high and low, but we market because we need to know what levels can act as turning point. Previous day low was not acting as turning point, instead virgin CPR was acting as turning point, right? So this is about virgin CPR. So we need to mark this every single day if it's available. Now if there is no virgin CPR in the last 5 days, then what? We do not mark. Okay, marking previous day high and low, we need to do it every day. If there is no virgin CPR in the last 5 days, we don't mark it. Alright, now let's look into other important key levels which we need to mark. Now traders, the next important level which I mark is supply and demand zone during previous sessions. So what do I mean by this? Now you can see that this is the chart of Bank Nifty 5 minutes time frame. Okay, the previous day the market opened here, alright, and today the market opened with a gap up and then it's moving towards the upside. Now since we are looking at 5 minutes chart, the maximum information what we can see here is just 1 or 2 days. Okay, so what I prefer doing is changing to a higher time frame and check if there is any supply or demand zones. Now just imagine this is previous day data and the market is yet to open here. Okay, just imagine the market is not yet open, but if I just switch to 15 minutes time frame, now what can I see here? Just ignore this, just imagine you have this data. Okay, so what I can see on a 15 minutes time frame is this level is acting as supply zone. So what do I mean by supply zone? When the market came to this level, can you see the sell off? This is not a retracement. The market just went down. With just a little retracement, again there was sell off. So this clearly means this is the supply zone. So this zone, previously the sellers became active and they pushed the market down. Okay, so we need to mark this level. Again what we can see, from this level the buyers became active, they tried to push the market up, right? So this became the supply zone where sellers are active, and this became the demand zone where the buyers are interested to buy at this price to push the market up. Okay, so I have marked the supply level where sellers are active and I marked the level where there is demand where buyers get active. So this is called supply and demand zone, and today the market has come to this level. Now if I switch back to 5 minutes time frame, we can see exactly the market is taking support here, right? Now just have a look. The sellers became active here and they tried to push the market down. It's acting as resistance level. So that is the importance of marking supply and demand zone, so that we know from where the sellers are active and from where the buyers are active. Okay, I hope you have understood about the importance of marking supply and demand zone. Now let's look into the next important level which I mark. Now traders, the next thing what we need to do is we need to mark important swing high and swing low on the chart, and this has to be done only on a daily time frame. Okay, now let's understand how to find swing high and swing low with an example. Imagine that the market was bullish for 3 days and then the market turned bearish. Next 4 days it went down, and from here again it went up. Now the highest point of the swing is this level, right? So this will be our swing high. Can you see how the wicks has extended here? These are extreme spike before the fall. These wicks also play a vital role. Okay, now the same way the lowest point of the swing is this level, right? So this level will be our swing low. Now the swing high can act as a strong resistance next time when the stock comes here, alright? And the swing low can act as strong support. The market can go up when it comes to this level for the next time. Okay, let me just show you with the live market example. Traders, this is a chart of Reliance Industry daily time frame. Okay, supply and demand zone we will check at lower time frame, but swing high and swing low we check at higher time frame. Alright, so if we see history, this was swing high, right? The market went here, you can see a big wick here, right? From this level the the market rejected and this was swing low. So if the market is coming down and breaks this swing low level, next it will try to break this level. If it's unable to break this level, from here itself it will bounce back. Alright. Now the main reason why we need to mark swing high and swing low on a higher time frame is because on a lower time frame, like 5 minutes time frame, you will not get so much information. See, the date today is 8th of June, but this swing high was formed in 8th of April or 9th of April. What happened in 9th of April, the market remembers it. If that is not the case, after this rally, the market had to go up, right? But why didn't it go? Because it's respecting the previous swing high. Alright. In stock market, there is a saying that history repeats. Okay. That we can clearly see here. Previously it was acting as resistance, market went down, and now again it's acting as a resistance. There is a chance of market going down. Is it 100% sure that the market will go down? No. Once it breaks this level, where a green candle like this is formed, which closes above this line, then the market will become little bullish and people will try to achieve this swing high, or it will go to this swing high. The next resistance, after this resistance, if it's broken, this will act as next resistance. Alright, so this is one of the important level which I mark, which is called swing high and swing low. Alright, now let's look into the next important level which I mark. The next thing what we need to do is mark gaps, if any, as it acts as strong support and resistance. We need to check for gaps only on a daily time frame. Okay, now let's understand what is gaps with an example. Just imagine Nifty opened here on Monday. On Tuesday also it was bullish, and Wednesday also, let's say it's bullish. Now Wednesday night, let us say some positive news came which will impact the economy. Any good news will affect the stock market. So on Thursday morning, let's say the market opened with a big bullish candle like this. Then we say the market opened with a gap up. Now where is gap? Now the difference between previous day high and current day low, this area we call it as gap. Okay, so there has to be a difference between the previous day high and current day's low, right? Only then we call it as a gap. Now instead of good news, let's say there is a bad news in world economy on Wednesday night. Even this will affect market sentiment. The next day, if the market opens here, you can see that the red candle opened below the low of previous day candle, right? And there is a gap. If the market opens like this, we call it gap down. Now there are two reasons why we need to know about this. Reason number one, in stock market, they say market do not like gaps. Most of the time, not all the time, but most of the time, the market will try to fill these gaps. Okay, so marking this level is very important. The reason number two is these gap borders, what you see, acts as strong support and resistance level. The market can bounce back after filling the gaps. So it's very important that we mark these levels. So that was about gaps. Now the last and final thing which we need to do is we need to use split chart. Not everybody has to use split chart. Anyone who trades index like Nifty or Bank Nifty like me, I suggest you to use split charts. Now traders, this is a split chart what I'm talking about. On the left side, we have Bank Nifty chart, 5 minutes time frame. On the right side, we have chart of Nifty, 5 minutes time frame. Okay, now just look at Bank Nifty chart. This level was the CPR level. Okay, the market broke this level and went down. Right, now looking at this, a lot of people will think the market will go down. So they might enter here, keep their stop loss here or above CPR level. Okay, now just see what happened. Now traders, can you see, instead of the Bank Nifty going down, it went up, right? And it took over all the stop loss. Now people get frustrated looking at this. They think my entry was proper, but still the market went against me. Whenever I take a trade, the market goes against me. Now a lot of traders who trade in index like Nifty and Bank Nifty, the main reason why they lose their trade is because they do not watch important levels on the corresponding chart. The corresponding chart for Bank Nifty here is Nifty, because the movement in Nifty will affect Bank Nifty and the movement in Bank Nifty will affect Nifty. Right, now on the right side, if you see this Nifty 50 chart, the first candle exactly it's taking support at CPR. Right, the market was able to make wicks here, but still CPI was acting as a strong support. From here, the market went up. Now since Nifty went up, okay, the market sentiment changed and this affected Bank Nifty, because of which people no longer wanted to short here. Instead, they went with Nifty sentiment, so they tried to push the market up. Sometimes you can also see that Nifty 50 also will have same kind of effect because of Bank Nifty. Okay, if Bank Nifty is at some support or resistance level, this will affect Nifty. So that's the main reason we keep split charts. We can see important levels in both Nifty and Bank Nifty and then we plan our trade. This is one of the important points you need to keep in your mind. Alright, now let's check out the last and final thing which I look into before the market opens. Alright, now traders, there's one more important thing which I do, that is I do not trade when there is news or events which has impact on the economy. For example, any pandemic, alright, so any war between two countries or any other news, global news or local news, which you think will affect your country or the entire world, we should not be trading that day. Even if we don't trade today, there is no problem at all because there is always tomorrow for us to trade. I always follow this. There is no requirement for us to trade every single day. Right? So these are all the important levels which I mark before the market opens. At least 30 minutes before the market open, I will check the news. If everything is fine, then I'll come back and I will mark all these levels and be ready so that I do not fall into any trap. Initially, you might take little more time to mark all these levels, but as you get used to it, things will become very easy. Now me marking this level every single day, it's become very easy for me. It hardly takes 8 to 10 minutes to mark all these levels. I suggest you to watch this video again because it's very important. So that's all for this video. Now if you enjoyed this video, don't forget to like and subscribe to this channel. If you think any of your friends will find this video useful, then please share it with them. Anyone who is interested to learn price action for day trading and swing trading from me, then the link for the course is there in the description box below. You can go and join. Now traders, that's all for this video. I'll see you in the next one.